and we're on now item number 3, which is expenses and taxes. If you expand this section, there are 2 sub-items, personal living expenses and tax adjustments and credits. Like the previous items in the main Windows tree view, if you expand these items, you'll find there's a husband and wife sub-item for each one. And because the tax section is 4 pages long, you'll find that the husband and wife items each have 4 sub-items, 1 for each page. Before we visit those worksheets, I want to point out that, to a large extent, these worksheets correspond to Factor G of 3105.18c1, that is, the standard of living of the parties established during the marriage. Now, the dictionary definition of standard of living is the level of material comfort enjoyed by a person. And in terms of this definition, I'd say standard of living is defined by spending and by expenses as much or more than it is by a party's income. When you think about it, you can have families in higher income levels that live frugally, and they may enjoy a normal, average standard of living in spite of their income. On the other hand, you can have families of modest income that are living way over their means, and they enjoy an artificially inflated standard of living. In fact, in the context of a divorce case, it's not a hard fact situation to imagine. So I would submit to you that Factor G is as much or more about spending as it is about income. And that's why expense and tax section is important, perhaps more important than you may have initially thought. Furthermore, there's consideration of Factor L, which requires that the court review the tax consequences of a support order. That also underscores the importance of the expenses section because it covers tax adjustments. And finally, there's the case law we covered that indicated that it was unreasonable to award spousal support in an amount which the obligor would be unable to pay. So, in arriving at that conclusion, that too involves a consideration of a party's expenses. I guess I may be overemphasizing this point because I'm reminded of a discussion I had with an attorney who mentioned that spousal support was all about income equalization. I remember thinking to myself that that was only true if you allow the court to ignore factors G and L, which, by the way, it would be error for the court to do that, considering when awarding spousal support, the court must consider all of the factors in paragraph C, or in subsection C. My conversation with that attorney reminded me of something I once thoughtlessly said to my wife. I said, "Honey, don't forget to read all the way to the end of the sentence, because there may be words near the end that change the meaning of the front part." Well, as they say on MTV, that was my bad. I didn't even notice she was holding a frying pan. So when I came to and the swelling went down, I resolved not to say things like that to her anymore. Likewise, I didn't want to argue with my attorney friend, but I thought the same thing. It's not about the first 4 or 5 factors in 3105.18c. You got to look at all of them. And there's plenty of them that are related to needs and expenses. Okay, with that overlong introduction, I'm going to click here on the husband item of personal living expenses. The worksheet that you see on the screen is self-explanatory, but there are still a few things worth remarking about it. First is that you can see the husband's expenses are entered already, and that's because I don't want to waste time having you watch me make what amounts to routine entries. One thing about these entries is that we gave some thought to keeping them realistic so we can keep our example within the scope of fact situations you might encounter in actual practice. Second is that there are certain items that are in blue, not counting the title there at the top, and I'm referring to items like charitable deductions, allowance, entertainment, music lessons, newspapers, and magazines. The reason these items are in blue is that so you can make an admittedly arbitrary but potentially helpful distinction between items that may be considered essential living expenses and items that might be considered luxury expenses. Now, there may be a better descriptive word than luxury, and if there is, I can't think of it right now, but I think you know what I mean. As I said, the distinction between essential and non-essential expenses may be arbitrary, but it can be relevant in cases where there's no financial crisis and there's enough money to support 2 households, as well as cases like we mentioned earlier where a spousal support obligor might be unable to make his or her court-ordered payments. At the very least, it's another example of information that's better to have and not need than to need and not have. Before leaving the personal expenses worksheet, I want you to look at the blank lines at the bottom of the page down here. That's the miscellaneous area where you can enter a description and its amount that you can't find a place for anywhere else on the worksheet. Now, you can't tell from simply looking at the lines, but the first few blank lines are for essential expenses, and the last few are for what I had called luxury or non-essential items. That really doesn't become apparent until you actually tab to those lines and you see the color of the text you enter, and I guess that's why I'm pointing it out to you. I'm thinking you won't encounter many expenses that you can't find a place for on the worksheet. When we designed the worksheet, we visited just about every family law website we could find, and if they had a downloadable pretrial statement or expense worksheet available, we took it and we homogenized all of them into one all-inclusive expense sheet, and that's why I don't think you're going to have much trouble finding places to put your expenses. One of the other things worth noting about the personal living expense sheet is that you'll notice that when you display this form, a monthly button appears at the top here on what we call the special toolbar. The button is there so you can switch easily between a monthly expense worksheet and a yearly one. The reason is that some bills that a client brings into your office might be yearly amounts or semi-annual amounts like an insurance policy premium or real estate taxes. Other bills, like utility bills, are monthly. In order to ease the data entry process so you don't need a calculator to be converting amounts back and forth, the monthly yearly button lets you change the worksheet to accommodate the type of bill you're working on. Just as an aside, the button can trick you if you're not thinking. You've got to remember that it's showing you what state of the worksheet will be when you click on it. What the worksheet is shown at the top on the caption here. I'll click on the button so you can see the switch. It's an annual worksheet like the caption says, and the button is labeled monthly because if you would click on the button, that would change the worksheet to a monthly one. In the sample that we've been working on, we're assuming that the couple has already separated, and therefore you'll see a separate set of expenses when you look at the wife's worksheet. Something that I'd mentioned earlier with respect to the taxable income worksheet is that when it comes to spousal support, we've broken it down into expenses related to this marriage as opposed to prior marriage. That's also true of child support, and that's the way you'll find these two areas treated on the personal living expense worksheet right here. Actually, the child support and spousal support fields of this marriage are completed automatically by MA. If a party is paying child support or spousal support from a prior marriage, this is where it goes. Finally, you may have noticed that there's no place to enter a party's mortgage payment in the lodging section of the personal living expense worksheet. This is also true of credit card expenses and auto loan payments, and that's because there's a specific separate section of the main window related to assets and debts, and we haven't gotten to that section yet, but that's why you can omit them from your consideration when you're working on the personal and living expense worksheet. At this point, I'm going to use the Close Active Window button on the toolbar here to return to the main window, and I'll click on the next item in the expense section, which is taxes, tax adjustments, and credits. I've mentioned more than once already that one of the mandatory 3105.18c considerations is Factor L, which is, in quotes, the tax consequences for each party of an award of spousal support. Now, in keeping with that mandate, the next division of the expenses section has as its purpose soliciting additional tax information. That is in addition to that which was entered in on the other taxable income worksheets. As I mentioned earlier, this worksheet is 4 pages long, but 2 of them, the alternative minimum tax forms, they won't be used very often. Starting with the first page, Form 1040, you'll notice that like the other taxable income worksheet, it is styled like a Form 1040. If you're familiar with a real IRS Form 1040, you'll notice that this worksheet is actually a combination of the adjustments on page 1 of the return and the rest of the return on page 2. We combine the two sections of Form 1040 because logically both of those sections represent adjustments, deductions, or credits as opposed to income, and therefore it seemed like the right thing to do, that is combining them from a data entry standpoint. In most other respects, this is just like the other taxable income worksheet. You tab from field to field and you make your entries. Of course, if you have a party's tax return in your hand, you are in good shape because you can simply copy the numbers. One caveat is that you should make sure that the items you're entering in will be consistent with the party's expenses for the year that you're working on. And by that I mean that a residential energy credit, for example, is typically a one-time deal. You make some home improvement that saves energy, you get your one-time credit. In instances like that, you don't want to be entering the residential energy credit on the worksheet because it was a one-time deal. It's not going to reoccur. It has no application to probably this calendar year or any future year. Another thing to note is that, like the other taxable income worksheet, we've separated alimony payments into two lines, 31A and B, so that you can distinguish between alimony paid with respect to prior marriages. And again, like before, alimony from this marriage will complete itself automatically. As I look at it right now, it's set at $19,047. You could also see that here on the Set Spousal Support button, and we'll talk about how that changes and how you can change it a little later in this video. Another thing I want to mention is that most, if not all, of the prior worksheets we've seen were only one page in length. When you encounter a worksheet like this one that's 4 pages, you'll notice that a button appears that allows you to page from one page to the other, and that's there on the special toolbar at the top of the screen. Likewise, when you're on a subsequent page, a forward or a prior page or a backward page button will appear. Moving on to page 2, we see that it is Schedule A. Now, the IRS doesn't really like people to itemize these deductions. It's much easier for both the taxpayer and the IRS to not have to go into these itemizations, and therefore they have a given amount that you can use as a deduction in lieu of itemizing your expenses. It used to be called the standard deduction, and then I think they called it something else for a number of years, maybe back in the 80s even. Zero bracket adjustment amount comes into my mind. But more recently, they've gone back to calling it the standard deduction. At any rate, the basic rule, with a few exceptions, is that you only itemize if your deductions exceed the standard deduction. They make the standard deduction high enough, and they restrict certain deductions so that a party will probably only itemize their deductions, that is, use Schedule A, if they have mortgage interest. Another deduction that might qualify is higher than normal medical expenses that were paid out of pocket or not covered by health insurance. Without those kinds of expenses, most taxpayers will not have enough allowable expenses to make it worth itemizing. Even medical expenses, for example, they have to exceed 7.5% of the taxpayer's adjusted gross income. So in most instances, even substantial medical expenses don't really qualify. Sometimes a person qualifies just on the basis of paying health insurance premiums. I think you'll find that if a party itemizes their deductions, it's going to be on the basis of a taxpayer's taxes and interest that they paid. If I click the prior page button to go back to the Form 1040, I see that they do still refer to it as the standard deduction. But the standard amount isn't on the form. I looked it up for you. In 2010, the amount for single filers was $5,700, and for head of household, the amount was $8,400. Also, I believe the amounts change slightly every year as they are adjusted for inflation. Looking at page 1 of our example, I see that the husband is itemizing his deductions, and of course I can tell that by looking at the checkboxes here on line 40. Going back to Schedule A, there isn't much more to say. Like the other tax-based worksheets we've seen, the Schedule A worksheet is a line-by-line copy of the IRS Schedule A, and the only thing to be concerned about is whether the expenses you're copying from the tax return are the same from year to year. If a party's employed and their income remains consistent from year to year, usually their withholding will also be pretty close from year to year. And home mortgage interest is also usually pretty close, although based on an amortization schedule, it should decrease somewhat from year to year. And you could even get an idea of how much it goes down each year by comparing several prior years' returns. Clicking on the next page, or clicking on to the next page, I should say, we go to the alternative minimum tax form, which is 2 pages in length. Like the previous tax-based worksheets, this form is also a line-by-line parallel to the IRS form, which is Form 6251. If you're not a tax buff, you might be wondering, alternative minimum tax, what's that all about? Basically, it's the IRS's way of saying you're not paying enough taxes for the amount of money that you're making. The mechanics of the AMT is that your regular taxable income is adjusted for certain items that may have been deducted, like depreciation, medical expenses, and state income taxes, to name a few. And if the new adjusted income is above the exemption amount, which for single and head of household taxpayers is $47,450, then that overage is taxed at a flat rate, which for single and head of house taxpayers is 28%. That's the AMT. Now, if the AMT is greater than the normally calculated tax, then the taxpayer is taxed by the AMT amount. I've included in the downloadable materials a table that we got online showing what the exemption amount is for the different filing status and what the tax rates are. So if you're interested in that point, take a look at that table. In actual practice, the alternative minimum tax does not come into play very often, except in cases of higher income individuals with excessive deductions. I'd like to give you specific income levels to look for, but there really aren't any, because whether the AMT kicks in is dependent on the difference between expenses and income rather than any specific level of income. The table I referred to a moment ago has the various exemption amounts. If, for example, a party's income is below $47,500, you needn't even be concerned with the AMT. I'm going to put away these tax forms that we've been looking at and return to the main window by clicking on the main window button. Although I should mention that it's good housekeeping practice to use the Close Active Window button to return to the main window, because it has the effect of putting away worksheets that you're not going to use anymore. And just because you're putting them away, it's no big deal. You don't lose any of your information. You can always go back and redisplay a page if you need to, and when you do that, you'll see all your stuff is still there. The only way you're going to lose things is if you quit the program without saving your work. And even then, you should get some kind of warning from the program. I'm not going to go over the wife's expenses. Instead, I'll repeat that the file I'm using in this video is available as a downloadable MAB file that you can open in your copy of MA if you have one, or you can check the complete printout of all the worksheets and reports, which is in a PDF file. That's amongst the downloadable materials, and you can view that then in Adobe, whether you own MA 2010 or not. Now, as far as case law, I'm just going to mention, I think, 1 or 2 cases, because like I said, we went over a whole lot of cases in the income section, and many of those cases had needs and expenses as parts of their issues, so there's no need to go over those again. At this point, I'm just going to direct your attention to a few cases dealing with expenses, in particular 310518C1G, which is the standard of living that the parties established during the marriage. Some of the cases I referred to earlier, as I said, they deal in part with expenses, they deal in part with standard of living, as well as the parties' needs, and I'll call your attention to those cases as we go along. I'll try to call your attention to those cases as we go along. The first case that I'm going to cover in this section is Macheski versus Macheski. It involved an 18-year marriage. The husband had a bachelor's degree in chemistry and earned $78,000 a year. The wife had a high school education and earned $11,000 a year. The magistrate ordered the husband to pay marital debts of approximately $56,000 and child support of $531 per month, but no spousal support. In the magistrate's calculation, $18,000 income was imputed to the wife. Objections were filed by both parties, and the trial court awarded $750 per month as spousal support for 48 months. The husband appealed on the grounds that the spousal support award was unreasonable and excessive. The appellate court affirmed the lower court's decision, citing a case called Hesseling, where court-ordered payments amounted to 75% of Hesseling's gross pre-tax income. Taking into consideration expenses and court-ordered payments, Mr.